The US dollar is mixed to start this Friday trade, with the euro versus US dollar unchanged, the dollar versus yen showing dollar weakness, but the pound versus US dollar showing dollar strength. I'll go through the technicals that are driving these three currency pairs in this video as we start the North American session. TGIF to all of you. Looking at the euro versus US dollar on the hourly chart and trading yesterday, the price fell sharply, falling below the 100-day moving average with momentum and getting below this swing area right through here. The swing area is defined by a number of different swing lows and swing highs going back in time. Each time the price came within this area, we went a little bit below it here, but then snapped back higher, leading to the rise to the high price for the year. It wasn't until a few days ago when the price came down to the high of that swing area. And yesterday, we snapped or we traded below that level with momentum, trading all the way down through another swing area down through here before bottoming ahead of this swing area down through here. We're kind of in nowhere's land here. Big sharp move to the downside here, big gap move to the upside through here. But this is going to be the next key target on the downside. Now, what happened since the bottom right here was we did see a rebound back higher. And where did we go? Well, we went right back to whence the price broke yesterday below this swing area, also below the 61.8% retracement. So this area is the natural level of resistance that you might expect on a rebound off of the last move to the downside. If the price can stay below this level, the bias remains firmly to the downside. What was once support becomes resistance. You can put all the trading jargon into play right at this level. And what we know is that from a trading perspective, the bias remains more negative and more in control. And when this area will hold, or if it holds, and if it does, we get to see a rotation to the downside. We haven't seen a little rotation to the downside. It's taking the price back down to this next level, which I have earmarked as a support. Why? Because of these different swing levels. It got messy through here, admittedly, but there was some continuity, some continuity of using this level as first of all as support right through here, and some levels within this range right here that held before moving to the upside right through here. So we'll give it its a little bit of its due, but I consider this area to be a little bit more of importance between 1.1518, 1.15, 295 on the downside for the euro versus US dollar. So we know the levels in play. Just follow them as your trader. Taking a look at the dollar versus yen. I'm going to start at the daily chart. And if you look at the daily chart, there are a couple levels that we stretch toward in trading this week that are of significance. One is I'm going to look at this level right through here, right around the 15 level. This level was at 15. This level was at 15. This level was a little bit higher than that. But the higher than that level right here was in between the 15 level and the 153.39 level. So 153.15, 153.39, and the high price that we saw come into play here yesterday and the day before, or today and the day before, came up into that area and found willing sellers who couldn't quite get up to the 39 level. And if I go to the hourly chart, I'm going to switch this to the hourly chart. This is that resistance level off the daily chart. And you can see how yesterday they came up to it once, we fell back. We came up to it twice, we fell back. We came up to it 3 times in trading here today, breaking a new high, and we fell back. So there is something about this area up here between the 15 and 39 that's keeping a lid on the dollar versus yen. If we're going to go higher, we need to get above that level. If we can't get above that level, the next key target on the downside will be the rising 100-hour moving average. You can see that's moving closer to the correction low from yesterday, looking to increase this level's importance not only today but going forward. At some point, that 100-hour moving average, if it continues to consolidate up here, will move ahead of that level, and then this will become another target to confirm. But right now, I get below the low from yesterday, get below the 100-hour moving average, and that would increase the bearish bias and have traders perhaps looking down toward this 38.2% retracement level down here at the 150.71 level. That would be the progression. Conversely, we could find dip buyers against this level, continue to find buyers against this level, and rotate up through the 153.39 level. So the battle's going on. It's what your thoughts Thoughts, are you more dollar bullish on the dollar versus yen, or do you see some corrective action coming in that currency pair? That's the key question for that currency pair. Finally, let's take a look at the sterling versus US dollar. Fell really sharply yesterday. That moved to the downside. Saw the price break below this trend line here, break below the 61.8% retracement of this move to the upside. That was more bearish, but as you can see, we did see a snapback rally after finding support down here against this key floor area. It was a ceiling here at first, but you go back here as a floor, sort of a floor there, floor. So getting below the floor opened the door for further downside. And what do? We corrected back up toward that floor area, but found early sellers, and that helped to push the price down to the low price in trading here today. That low price has come down to what I had as my next key target on the downside, which was this level right through here, which is just a swing level, the last swing low before moving sharply to the upside. So market seems to be paying attention to that level at 1.3259. We're currently trading at 1.3275, but sellers remain more in control in the sterling versus US dollar. A long way away from the 100-hour moving average, though, which gives you kind of some potential for a bounce back corrective move after trying to move lower yesterday, moving lower again. Do we get that bounce back off of this support level? We will see. But if you are someone inclined to think that we do have room for a bounce, then the 1.3259 level will be your risk level on the downside. I wouldn't play on another breakout below that level, as it would seem like the pair is on its way to the 200-day moving average at 1.3171. So there you have a look at the three major currency pairs to kickstart your day. TGIF to everyone out there. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.